We see buyers delay buying for years because of one simple credit myth. And today, we're putting that myth to rest. What's going on, everyone? Welcome back to another episode of Closing the Deal, the podcast focused on clear, simple, honest home buying education. I am one of your hosts, Zach Dickson, and joining me, as always, is my co-host, Sam Enright. And today's episode topic is going to be, what credit score do you actually need to buy a home in 2026? Sam, I know that you can probably vouch for this. This is a question that you likely get very, very often for prospective buyers. So why don't you get us started talking about our episode today?
Yeah, excuse me. This is going to be a great episode here talking about credit because it's one of those things that we talk a lot about things in this business or this world, this real estate mortgage world that go untalked about or are not taught to most people. And one of the biggest things that we see is credit, right? Most people, when we come up through school, when we go through different things in life, college, those sort of things where we learn, very rarely are we ever taught about credit and how credit works, what a good credit score is, how to get a good credit score, how to fix bad credit scores, all of that, right? And so, oftentimes we have a lot of buyers that will put themselves on the sideline due to credit and credit alone. They'll monitor their score on Credit Karma or Experian, and they will determine that based on the score that's coming back on there, that they're not in a place where they can, be qualified to buy and those certain things, right? So, that kind of takes us into, the first thing we wanted to talk about here, which is credit myths. A lot of people have an idea in their head of where credit needs to be at in order to buy. And oftentimes that's not normally the truth, right? So, in today's world, lenders and guidelines and loan programs have become a little bit more lenient on credit scores, to be honest. And so, a lot of people probably don't realize what minimum credit scores you can actually get approved for a home with. So we wanted to kind of break that down today, talk about different credit myths, also talk about what is an ideal credit score and what does that look like, and then also kind of talk about maybe a little bit of some client success stories that have come to us that have had credit issues and that we've been able to help and get them in a position where they can buy a home.
For sure. And just kind of piggyback off that, just wanted to, touch on something you mentioned. There's a lot of misinformation out there, I think, in today's market about credit and, how it affects buyers as a whole. And so I think that's just one of the big things that we want to touch on today is, obviously that's the name of the episode is the myths, but obviously just want to dispel some of those things and hopefully get that information out of prospective home buyers' heads that may be, um, debilitating them and getting that process started.
Yeah, I mean, credit follows right along with down payment myths, I would say. So, how do these things get started? Well, there was a time period in life where these things were likely true. And what happens is normally, if that was your grandparents, time period, they'll pass that down to their kids, and then their kids pass it down to their kids. And then there you guys are, having, a couple generations of information given, passed down through your family. And not to say that that information was wrong at a certain point in time. I know we covered it last year on an episode that, back in I believe the 70s or 60s, 20% down was required, right? And so as time has gone on and as things have, changed and the industry has adjusted to life, those things have changed along with it. And so, it's not that that information was always incorrect, but maybe it's just now incorrect because, again, this is a very fluid business. Guidelines are always changing. Loan programs are always adjusting to, the way the world is working and the way things are going. And so, trying to dispel that is really important. So, getting into that side of things, most people think probably you got to have perfect credit, right? You got to have, you got to have a 700 or higher score in order to buy a house, and that's just simply not the truth. So guys, with that said, credit does not need to be perfect. And, there are a plethora of different ways to work around credit. And I think one of the biggest things that hurts people is believing that because where their credit is at currently that they cannot qualify for a home, or that it's not even worth looking into it, right? And so it's one of these cycles in life where you may not know all of the information, you haven't spoken with a lender, you may have made the assumption or you know the decision that you are not in a position to do this, right? And you don't go any further and look into it. And so that cycle just continues to repeat over and over. The next year comes and maybe you've worked on your credit a little bit, but it still hasn't risen to the point where you thought it would. And so you put it off for another year. And then, it just continues to compound, right, over time. Whereas, if you get with the right lender, if you get with lenders that do help work on credit and do help with that side of things, you can actually get a good game plan put together, even if you're not in a position to buy right now, or even if you're not in the best credit score range that you could be in. There's so many different ways that you can operate and kind of go around working around that.
For sure, because I think that generally speaking, with prospective home buyers, when they start to believe these myths on needing a perfect credit score, they don't even really, they kind of shut down at that point. They don't even really explore the avenues to be able to get to that point. It's kind of like, hey, I'm not here right now, and so I'm not going to be able to do this. I'm believing in this myth, and I'm also not going to take the steps to necessarily, try to change that moving forward. Ultimately, if it does happen to where you obviously don't have perfect credit, and you go in and you talk to a lender, and at that point they say, no, we can't make this happen, but we can put a game plan together to get us to the point where it is an acceptable credit score to be able to purchase that home in whatever time frame that is, 6 months, 12 months, 18 months, whatever it may be. That is just a significantly better route than just kind of shutting down completely and believing the myth as a whole. And so with that being said, you do not need a perfect credit score to buy a home. And ultimately believing that myth is what holds people back for years on years to come.
Yeah. So Zach obviously touched on a very good point there when talking about, not needing a perfect credit score to buy. And so that brings us into the conversation and the topic of, well, what credit score do you need to buy? So generally speaking, there are programs out there are investors out there that actually will go down to, I've seen as low as 580. And, now obviously that may not be the most optimal credit score, but it obviously opens the doors to, getting you at least in having those conversations and maybe even potentially getting a home with that lower credit score, right? And so when we're looking at an overall credit profile for a buyer, we're going to evaluate obviously where you're at currently. And then we're also going to evaluate what steps we have to improve that score, right? Because if a buyer comes to me and they have a 580 credit score, yes, could we potentially get that loan done in the current state? Absolutely. But again, I feel it's my responsibility to the buyer. I feel it's my responsibility to, the clients and everybody involved that we try to make this the best deal for the buyer specifically. So we will look into rescore options. We'll look into, does the credit have the ability to go up? And what does that look like? Is that a 30-day process? That is 60-day process? Is it couple months process? And weigh those options with the buyer, right? If you're in a situation where you kind of have to move relatively quickly, maybe we're, hey, let's see if we can get this figured out, the lower credit score. We'll give you guys a plan to work on the credit, and then once you actually purchase the home, then you guys can start to work on these items. And then maybe a year down the road, year and a half, once the credit is in a better position, then we can look into doing a refinance to get you guys into a better situation rate wise, loan program wise, that sort of thing. And so there's so many different options on the table, but that's why it's really important to have those conversations with your lender, have those conversations with the trusted professional, that's willing to work with you and willing to, talk about those things, right? I can't speak for every lender out there. I can't speak for every bank out there. I don't know. But I do know that there are a lot of great lenders in our area that will actually work with you on credit credit score, and we'll actually take the time to go through those steps and let you know, hey, this is where we're at now. Here's where we can get to. What is your timeline? What is everything that you have going on? And what is, what do you think is going to be the best route? So, you know, that's really what we like to focus on. So minimal, obviously 580, 600. If you have a score around there, we can likely make that work with either minimal credit rescore or doing a little bit of that and getting you up a little bit higher to obviously benefit you in the long run. And then when it comes to optimal credit score, of course, yes, if you have a 700, over 700 or up to 800, those are going to be, what would be considered optimal credit scores, right? So those are going to typically give you access to the best programs, to the best interest rates, that sort of thing. But again, I think getting out there, buying a home, I don't think waiting until you have a 700 is always the best decision, right? Because as we talked about last year and just looking at COVID time and the prices of homes and interest rates versus now, having you get in at that point in time would have made you a good amount of money on the appreciation of your home and obviously saved you money on the interest rates versus what everything is, doing now. So, getting involved, getting in there, if that's something you want to do, if buying a home has been on your radar, then getting out there, having those conversations, no matter where your credit score is at, and figuring out the best route for you is going to be extremely important, in my opinion.
Absolutely. Great points there, honestly, because I think that, kind of going back into segment one, the rate impact of different credit scores probably also plays a factor into the decision making of the buyers as well. A lot of marketing that comes out from mortgage companies, lenders, banks, large banks, things like that. Those are going to be tailored to, the higher credit score people. So when, the lower credit score people see that marketing, they see a specific rate that may not necessarily apply to them, and it obviously will change the whole makeup of the loan, the whole mortgage payment as a whole, and can kind of deter maybe a low credit score borrower from pursuing the situation any longer. And so it does have an impact, unfortunately, just based on the credit score. It can be done, absolutely, like you mentioned, at a certain threshold, but it's just going to be it's going to look a little bit different than what you would at the optimal score range, like you mentioned there. I think that was a great point for the prospective buyers out there.
Yeah, absolutely.
I will take us into the third and final segment of the episode and what really hurts your credit before buying a home. And so I think that this is, I hope, common knowledge at this point. Probably not common knowledge yet, but hopefully by the end of 2026 and through our content, this will be common knowledge for the prospective home buyers listening to the podcast. But ultimately, if you know that you are looking to purchase a home in the near future, you definitely don't want to be taking on new debt, have late payments, or take on big purchases in the immediate near future right before you're purchasing that home, because ultimately those three things can hurt your credit score very quickly right before purchasing, and that is obviously not what we want to do. Opening new accounts and taking on large debt will change your debt to income ratio. Obviously, that will be something that you talk about with your lender when you get that process started. But if 10 days before you have that conversation with the lender, you have a general direction of what the finances look like, and you open a new large car account, that will dramatically change the amount of monthly mortgage payment that you're able to qualify for, and ultimately will, typically speaking, when you add new large debt to your account, will take that credit score down as well. Late payments are pretty self-explanatory. If you're making consistent late payments, 30, 60, 90 days late, those are going to show up on your credit report when you get the credit pulled for your mortgage application. And ultimately, those things will take your score down. So want to make sure that even if you maybe are paying a little bit late, you're not hitting that 30, 60, 90-day mark to have it hit your credit report. So it shows up when that application is ran. And obviously big purchases as well is similar to the new debt. Obviously any new debt that's added to your account is going to go on your debt to income ratio, can affect your buying power, and can lower your credit score as a whole as well.
Yeah, man. The big one in there is late payments for sure. Guys, there is no way to crush a credit score faster than making your payments late. And if you guys have not already, we did drop a credit episode last year in 2025 where I kind of broke down just everything that goes into your credit and, really, I guess, talks about the pillars and what makes up a good credit score and how to, get that into the optimal range that you need it to be. And that is one of the largest ones is late payments. I mean, you could see 50 to 100 point drop. I mean, with a snap of a finger as soon as you make one late payment. So, that is something you should be definitely very, very mindful of. And, it does not have to be large payments. You can make just the minimum payment to stay on time. And actually, even more than that, as Zach mentioned, 30, 60, 90 days. A lot of people think that they're late as soon as they get a late fee from their credit card company because, they missed their payment by a day or two. That is not the case. You will make your late payment, of course, to the credit card company. You will be late to them on that regard. However, that will not actually report on your credit until you become a full 30 days behind. So, you do have a little bit of a grace period there where you can actually go in and get your credit or get those cards taken care of or whatever account it might be. And I would strongly, strongly urge and suggest that, because if there's one thing that we see on credit when we pull it that is the most detrimental to clients, it's definitely the late payments. Unfortunately, there's not much from a lender perspective that we can do, to combat recent lates, right? So you kind of just have to wait the time period for them to get off. And obviously, the closer to the time when the actual credit is pulled that the lates were made is going to be the more detrimental. Obviously, if you're further out, let's say you had a late payment 12 months ago or 16 months ago, that's much different than having a late payment a month ago, right? So, making sure that you're staying on top of those. Obviously, things happen in life and situations may arise where, maybe something came up and you could not afford to do that, but trying to keep those things on track as best as you can is always going to be largely beneficial for you. So there's other ways to get around new debt. There's other ways to get around big purchases, those sort of things. Obviously those are going to affect your debt to income ratio and those sort of things when it comes to how much house you can actually afford. But late payments are the big one in that three that really sticks out to me. It was like, hey guys, we got, that's if there's a lasting message that you take from this episode, it would be, please don't be late on your credit cards, or your mortgages, or, any debt reporting on credit. Do not be late. So, and, before we kind of, wrap the episode, I just wanted to we actually just closed a loan for a client, and I thought it was a really kind of cool success story because it was a client that put their full trust in us, and I worked with him directly. And when he came to us, the credit was not where it needed to be. It was a little bit in the lower end of the spectrum. And I just, I pulled a report for him. I was like, hey man, look, if we can do these things, we can get you, it looks like, over 100 point increase, or 110 point increase. And so we worked with them for about a month and a half. He followed the plan that we had set forth, which was really just a lot of paying down credit card balances, getting that utilization lower, and then also taking care of a collection on his credit, getting that paid for deletion, which, if you guys don't know, I've talked about that in previous episodes as well, but actually paying off your collections and requesting them to delete it from your credit history once it is paid. He did those couple of things, and his score did shoot up over 100 to 110 points. And we were actually able to get him pre-approved, send him out looking for a house. He got in contract and actually closed. So I think we started working with him at the beginning of October, and he actually closed by the end of December. And so it was just one of those things where, if you trust the process, if you put the work in and you do the things that are necessary for credit, yes, the algorithm is not perfect, but, there's a pretty good, chance that if we follow along these lines that we can get you into a relatively good credit score range. And so it was just really awesome. Obviously, he was very happy and very elated with the whole process as a whole. And just, even just seeing the credit score go up, take take the house out of it. You know what I mean? To see 100 to 110 point increase in your score, like that's obviously a really rewarding feeling for you as a buyer, as a client. And it's obviously what we do this for. So, never think that any credit score or any situation is too bad. There are ways to get around whatever is going on. We do have credit repair, that we can outsource to. We do have some ways that we have, credit rescore plans in-house that we can pull from a company that will actually, give the entire instruction list. And so, and then obviously there's 7 years of knowledge here where I've pulled and looked at probably over 1,000 credit reports in the last 7 years. And so you start to figure out, hey, what goes into this, what makes this happen. And so it's again, no situation is ever too bad. So even if it's 400s, I've seen a few of those. I've seen some really low 500s, but ultimately ignoring that and pretending like that's not there is way worse than just dealing with it. Even if it does take you 2 years to figure it out, you're going to be 2 years ahead of the version of you that just waits another 2 years before dealing with it. Right. So, that's kind of my lasting thought on that. I just, wanted to share that just because I think credit is one of those things that people think that they're kind of stuck with where they're at. And that's just not the case.
Yeah, that's awesome, man. That's a great story. I really appreciate you sharing that. And I'm sure the buyers listening will appreciate that as well. Because ultimately, I think that really just takes me into my last thought of the episode, the last real thing that I want to hammer home. And it's that, if credit is the thing that's holding you back in 2026, our full episode today, and especially that example that was just given, walks you through exactly what lenders are looking for and how to get around that. So ultimately it can be done. You just have to, I think it applies to a lot of different things in life, but you really do have to believe and trust the process and, do those things to get yourself set up for that, situation, for that journey itself. So that is really all that I have to finish this up. Is there anything else that you wanted to touch on for today's episode, Sam?
No, guys, I think that's kind of it with, with the credit side of things, just, like you said, hammer home that, no situation is ever too far gone. So, you can always, figure it out and work through it. And no, is it going to be a quick process? I would not say that. Is it going to be easy? No, not always. But, is it worth it? In my opinion, it is. We can't control ultimately what the world runs off of. Credit is very important, based on the way that we are structured as a country and as, lenders giving out money and those sort of things. And so, why not figure out a way to play the game and play it at a high level, is kind of my thought process on it. So obviously, guys, please follow the podcast so you don't miss this week and the upcoming weeks. We are currently working on building your guys' 2026 buying plan. So we got a lot more great content coming. And obviously, want you guys to follow along with us.
Absolutely, guys. Appreciate you guys tuning in to today's episode, and we will see you guys on the next one. Cheers.
See you guys.